All right, guys, Paul Singh here, bullsonwallstreet.com. We're doing a blog post today on how to aggressively trade earnings breakouts. We're going to use recent winning trade in RRGB, that's Red Robin. Now, this trade is a little different. You guys know we've been trading earnings breakouts quite a bit this past earnings season here. And the normal style for our earnings breakouts, and first of all, we never hold before earnings. So we want to see that earnings play breakout or break down and then make our play after that. We traded some breakdowns. We had some really good trades in Tesla, Amazon, Google playing off the actual breakdown. I'm not sure if it was Google, but one of the FANG stocks here, we played for a gap down that reversed. And then we've also played the breakouts. And what we normally need to do is we watch that breakout and then we get a pattern emerge and we trade that pattern. Once it emerges, it could be a week, it could be a month, it could be 2 months where we actually trade it. We build that earnings breakout watch list and then we eventually trade that stock if it sets up. Now, on rare occasions, we actually enter on the day of the breakout without a pattern. We basically just jump in and it almost feels like guessing, but it's not. And we have a really good success rate with this because there are some key factors we look at. I'm going to illustrate that with the RRGB Red Robin trade. Now I'm going to pull up the chart here, and you can see the chart for RRGB. And you can see basically on the 17th here, we got that big breakout. Forgot what percentage it was. It looks like it was at least 10 or 15%. Huge, heavy volume here. This is the exact kind of breakout we want to see on any earnings breakout play, whether it's a pattern or whether we're looking to enter early. So we got that big breakout, and actually I'm going to take off this part of it, what actually happened. Let's go to the day we break out so we can see exactly what we were seeing on this day. Now, we had this huge breakout. And normally we're going to say we got the breakout now. Now let's sit back, put in a watch list, be patient, wait for a few days. But we did not do that with our RGB. We actually jumped in on the day of the breakout. So I took 400 shares, 70.75 towards the end of the day. It ended up closing at 71.85. But I want to wait towards the end of the day, at least. If there's an hour left in the trading day. So here on the Pacific, it closes at 1, market closes at 1. So, I'll enter the trade after 12. So, an hour is okay, or sometimes I'll do it 5 minutes before the close. But now, a lot of you will say, hey, why don't you enter when it's at 68 or 69? The problem is an hour after the open, 2 hours after the open, we don't know if this thing is going to hold up or break down. And those of you who day trade these a lot, some of the strategies here are to actually play breakdowns on these earnings breakouts. So we need to know that the stock is going to sustain itself. Once we have that proof towards the end of the day, we'll go ahead and enter. So the entry here was 70.75. Ended up getting out here on the third day at 73 for a quick $900 on a two or 3 day hold time. So 3 days, you're entering at the end of the day, so it's almost like 2 days here. So very quick, very aggressive trade. Now a lot of our swings will hold for a month or 2 months if we have to. This is not that type of trade. We usually hold these for a couple of days to maybe a week and a half. So it's a very aggressive, quick, almost hybrid swing type trade here. So now why do we enter these things early compared to some of the other breakouts, actually most breakouts, where we enter after a pattern? So my earnings breakout list this quarter was about 200 stocks that broke out positively on earnings and fit some other parameters I like for earnings plays. Now, out of those 200, I only traded 7 of them on the day of the breakout. And let's talk about why I trade these things aggressively, or when do I trade these things aggressively. I don't do it, every day. Through about a month and a half, I had about 70 of these trades. 2 things that are key is, one, I want to see explosive volume. I want to see a stock that's kind of been ignored. And we can see that with RRGB. It's not like it had a lot of interest going into the breakout. So I mean, it was running a bit, but the volume was 300, 400, 500,000. A lot of traders swing traders won't even trade a stock that trades less than a million or 500,000. They think of that as illiquid. So it's already not on a lot of traders' radars. So when it gets on their radar, they want to jump in and you'll see the pop. So we like to see that explosive volume coming out of nowhere. The second thing we like the potential for a short squeeze that can put it in our favor. If shorts start to cover, the thing's going to rise. Even if it doesn't deserve to rise, it will rise. And that gives us that quick pop. So if you see something with potential for a short squeeze, we're going to get in. Now, in terms of the type of stock I want, I like it to be a smaller stock. So I like the low floats, the small caps, maybe even the mid caps, but I'm probably not doing this with a Google, with an Apple, with an Amazon. That's not to say those things can't run, but we're looking for a really high probability type trade on this, where we have the high win rate, because we're exiting pretty quick also. So I want it to be a light stock that gets pushed by volume. So that's one of the factors we're looking at. The other type of stock I want is one that doesn't have a lot of overhead resistance. I don't want it coming up to this resistance level that's going to stall the stock. So we can see here with RRGB, there was nothing really here that was going to hinder the breakout. It already kind of broke this level here and broke this key level at 68. And because it had broke this level, now if it had been breaking out under this, if the breakout level was 68, or if this consolidation was up here at 72, I would not have taken this trade. So it needs something that has some room to move. So those are the type of stocks. And again, the hold time is going to be very quick on this setup. I'm looking something that I can get in and out of in a few days, maybe a week, at the most 2 weeks. Finally, target levels. This is an aggressive trade, but the target is not aggressive. We're aggressive in the entry. We're aggressive in terms of how quickly we're going to take the profit. But in terms of looking for a big trend, we're not doing that. We just want to see a quick pop and be in and out of the trade in a few days. And that's what we got here now with RRGB. So you can see here, we entered 775. Once it got to 73, we were out, because these things, they have so much coming into these that they're usually not going to run like a normal trender. It's going to consolidate for a while. Now, once I get out, I will watch it again for a potential break, and at that point I'll look for a normal swing type momentum move. So we got the quick pop, 2 or 3 points here, then you wait for it to consolidate, and now this is on my radar for another trade. And if it breaks the high here, maybe then it runs to 80. So it's consolidating, let it congest these gains, and then go for the big win. So that's the idea behind this aggressive earnings breakout. We want something that's explosive, that can pop for a few points very quickly, get in and out of the trade and grab that, whatever it is, whatever is good for your account size, whether it's 200, 500, 1,000, just grab that quick profit and get out of the trade. All right, guys, so we're going to be doing a lot more of these. I'll be putting out another video on some of the big tech trades we took next week. And of course, we'll have the weekly swing report on Monday. And those of you who want more, who want access to the trades and my daily reports, go ahead and sign up for the swing trade service on bullsonwallstreet.com.